Are you looking to get ready, be prepared, and transform your financial future? Then you've come to the right place. This is the Get Ready Money podcast with Tony Stewart, where Tony has insightful conversations with financial experts who are changing the way we think about money. Catch up on the latest financial trends and hear practical advice from Tony and his expert guests so you can build healthy habits that work. Be empowered with tips for implementing small changes that can have a big impact on your financial future. So sit back and get ready to hear from today's guest.
Welcome to the Get Ready Money podcast, changing the way we think about money. I'm pleased to be joined today by Dennis Harhalakis, which I already messed up the name. So Dennis, thanks for bearing with us. So Dennis is a certified money coach and money coach trainer. In this episode, we'll be discussing Dennis's insights on how we change the way we communicate about money. Dennis, welcome to the Get Ready Money podcast. Thanks for joining us today.
Tony, I'm so pleased to be here. Thank you so much for inviting me.
Yeah, appreciate your time and insight. So, let's jump in. Tell us a little bit about yourself. What is your origin story?
So my origin story has two parts, I guess. I spent 30 years in financial services, and I spent a lot of time around people with money. I was in wealth management and basically selling products, working with financial advisors, working with clients. And so after 30 years, I thought I knew a lot about money. And I guess in some senses I did. I knew how the financial system works, spent a lot of time in it. And then about 8 years ago, I was listening to a podcast, and there was a financial planner on it in the UK who had just certified as a money coach. And she was talking about the origins of our patterns and behaviors. Where our money stuff comes from. And I had this realization that for the whole of my life, I had been dragging around my father's money anxiety. It was his. It was very clear to me at that point in time where it came from. And because money coaching was a thing, it gave me a path to understanding it more and then learning how to work with it. And over time, reduce the influence of fear and scarcity in my life. That was my childhood experience. So I trained as a money coach in 2018. I spent nearly 8 months or so. I did a couple of courses with the Money Coaching Institute. And I learned about myself and money because I knew a lot about money, but I didn't know very much about money and myself. In fact, I almost knew nothing about money and myself. And so my journey since then has been to understand myself, my money story, understand my relationship with money, and help other people with that process of healing from some of the negative influences that we picked up in childhood around money. And then I'm very blessed to have started as a money coach trainer 3 years ago. And that really, it is very, very true what they say. When you understand, when you teach something, you learn it twice. And so it's been a privilege to share the work that I do to help other people become money coaches and to bring the kind of, the healing process of healing around money, the process into the wider world. And of course, listen to their stories and help them understand how they think and feel around money and how they can improve that. So I hope that kind of gives you a good summary of where I am now. Just to say, I work with individuals, I work with couples, and I work with financial advisors and professionals to help them understand client money, because if you are in the business of helping clients make financial decisions, which most of us are in one way or another, then I think it's really, really important to understand how people make financial decisions, and very specifically how that person in front of you makes their financial decisions.
Yeah, I think that's so important, is the why. I mean, that's the whole point of this podcast. I spent 30 years as a fee-based insurance consultant working predominantly with financial planners, trust officers, litigation attorneys, basically the people who are working directly with money. And that's the thing that came up is, even though sometimes, we'd have a definite recommendation that was bulletproof on a factual basis, the clients would go in a completely different direction or just would not be in line with the recommendation. It had nothing to do with the numbers. It had nothing to do with their
Right.
understanding. They fully understood the issues, but there was a blockage. So I want to walk back to something you said, just because I think this is important for people. Is you mentioned fear of scarcity. Can you explain what you mean by that?
Sure. Well, maybe I can paint you an analogy. So a lot of time people or in our space say, well, if money was a person, what would it feel like? What would they look like? If money came to tea or, if money was your lover, what would they look like? I've always kind of struggled with this, but I was talking to someone recently and it just struck me that what in my, when I was growing up, the messaging I got around money was very important. It was too important to waste. It was just this thing that was kind of really, really important. And so if I can paint you a picture, it's like I grew up hanging on to money. If money was a person, I was hanging on to money like this for dear life because money was it's so important, you didn't waste it. And it struck me as I was talking to someone about this on a podcast, like if you're hanging on that tightly to something or someone, is there room for anything else in your life? There isn't. Right? There isn't a room for anyone else. There isn't a room for anything else. And you're just so trapped in this hanging on to money thing that it doesn't allow you to grow. It doesn't allow you to be optimistic. It doesn't allow you to embrace what the world has to offer. So scarcity mindset is really about there is not enough and there'll never be enough. And so when you transition to there's never enough or there will never be enough, you try and hang on to everything because you don't know if you're ever going to need it. And it's a really, really toxic place to end up because everything gets evaluated around, well, no, I can't spend that. I can't buy that. I can't give that to myself. I might need that money. And so many people get trapped in that. It gets passed down as a narrative from generation to generation. And I fully get it. I can understand why um, why that happens. Because let's take the US, for example, when you lived through the Great Depression, there wasn't enough. And the only way to survive was by hanging on to everything that you had. And that as a narrative, a money narrative, if you like, or a money script gets passed down to the next generation. My father's money story. My father was born in 1919, so a long, long time ago. And he was born in Greece, and he went through the Second World War and then the Greek Civil War as well afterwards. And Greece was invaded by Germany. They kicked the doors down, threw them out on the street, and so there was a loss of everything. So I fully understand where his scarcity came from. And he operated out of that. And I'm beginning to free myself from the shackles of it because it's really hard. It's a hard place to live, but also when you radiate anxiety to all the people around you, they pick up on it. And
Mhm.
that's not a nice space for them to live in. So it's as much when you talk about kind of understanding your relationship with money and healing your relationship with money, the main benefits are not usually financial. There are parts, depends. If you start anyway in fear and scarcity and anxiety, the main benefits are not financial. The main benefits are because you just become such an easier person to live with because you're not radiating this scarcity and this anxiety to everybody around you. You're not always weighing up, can I afford that? Can I spend that? Can I get away with not buying that? How do we do it the cheapest way? How do we do it without spending any money? And I grew up in that environment, and I know that it wasn't much fun to grow up in. Um, and I'm trying now that I understand myself and my relationship with money a little bit more. I'm trying to make sure that I've changed that in my life with my kids. My kids are a bit older, they're 19, 21, and 23, so they've had to live with my scarcity mentality. But now my inherited scarcity mentality, I should say. And then now I'm trying to make up for that by being much more open and much less fear-based. Because fear-based is a bad space to live in, but you just don't open yourself up to possibility. You shut off possibility. You're trapped in, I can't do that. I can't give that to myself. I can't afford it. There won't be enough. So I hope that explains it a little bit. I think it's totally understandable to have that as a general fear. And I don't think that the world has got more complex. It's got more complex financially. And so I fully get why that's the case. It's just interesting that for me, with the technical knowledge of the financial system, that did not help with my anxiety a bit. So if you have no understanding of how the financial system works, I know that people find it really, really challenging and threatening.
Yeah, no, and I think the complexity of the financial services industry, yeah, as you said, I've seen it get much more complex since I've been in the financial services world, and it doesn't help anyone. Even
No.
members of the financial services community get stressed out in trying to keep up with everything because it becomes impossible to know all these permutations, all the law, everything else that you need to have at least a working knowledge, even if it's not your area of specialty. You have to know something about these other areas so you know where your specialty fits into the overall scheme. And a lot of us get very trapped in just looking at our own area of expertise. But I think something you said that is really, well, you said a lot of amazing things, but I think one thing that we're seeing is people retiring and not being able to make that switch from accumulation to spending. And I think that's where a lot of this is really showing up. People have been trained for 40 years, put money aside, you know, and then all of a sudden there's an expectation. Okay, you can go spend it now. And people are like, I don't want to run out of money when I get old. I mean, what do you recommend to people when they reach that point where they're making that flip from accumulation to spending?
Well, so I just like tease that out a little bit because you raised a fascinating point, which is if I'm your client, I'm saying, Tony, what you're telling me now is that this behavior that served me well for all these years, you're telling me that at the very point I no longer have a regular paycheck, I can let go of everything, right? At the very point
Yeah,
I'm
that's
late,
exactly it.
you're telling me right now that I can spend everything. And what you're really saying is, yeah, well, we've modeled the cash flows, and if you live, you've got enough money to live till 80 or 90 or whatever else it is, or 100 or even more. And so how am I going to change a lifelong habit that has kept me safe at the very point where I no longer have money coming in, you're telling me to spend. So I think there's a huge area of challenge around that. And let's not forget, retirement is not just about loss of income, it's loss of status, it's loss of position, it's loss of learning. There's a huge amount going on. We can tease this out a little bit more if you want to kind of broaden things out into transitions, but transitions always involve a loss and a gain. So maybe I've got more spare time, right? But I'm losing a whole bunch of stuff, including that regular paycheck. So I think what's emerging now, certainly, if you look at the kind of traditional model, which was a three-stage life, you have your learning bit, you have your working bit, and you have your retirement bit, is that now we're looking at a very much more multi-stage process. What that means is, I think that retirement as a hard stop is not helpful. I don't think it ever was helpful, to be honest with you. But that's just a story, and that story emerged in the mid 1900s, early to mid 1900s. The whole concept of retirement, anyway, was fairly new, and we're just adapting it as we go along. We're adapting it because we're all going to live longer. So this idea that you stop forever at 60 and then do what? Either from a mental perspective or from a funding perspective, just doesn't make sense. So that story around retirement is itself evolving. When you think about retirement as how do I build up enough capital, for want of a better word, savings, whatever, to be able to choose to work as much or as little as I want. I think that's a much more helpful framing around it, because I think work is absent. Obviously, if you're doing something really that's hard labor and you've done that for 40 years, I fully understand why you might want to stop. But if you're in the service-based industries, or you're what's loosely termed a knowledge worker, then actually kind of after 30 or 40 years of it, you've got this huge base of knowledge that's incredibly helpful and incredibly useful. And now we're in a situation where it's far easier for people to set up coaching businesses or mentoring businesses or use some of that knowledge. So I think the broader answer to your question is that it shouldn't be a peak, as they say, and when you're climbing a mountain, most of the accidents happen on the way down. So we don't want to do that. What you need to do is smooth it out and think of it as a multi-stage process. And then maybe over your lifetime, you may actually, if you're saying, well, I can work 2 days a week, 3 days a week, 4 days a week for a longer period of time, then maybe in your lifetime, from a multi-stage perspective, you actually take little gaps, you retrain yourself, you save enough money to take 6 months out, and you go and study something and do something new, or a new skill set that allows you to use your knowledge, but in a slightly different way. Maybe you go on a coaching course or something like that. So that's kind of my broad answer is it's about preparation, it's about thinking, it's about thinking ahead, it's about not limiting yourself to thinking my value is only in this small space that I exist in and have existed in for 20 odd years, because that is not going to be the experience of our children. And that again was a story that emerged in the post-war period around you work for 30, 40 years and then someone gives you a pension for the rest of your life. Doesn't exist anymore. So the stories we tell ourselves about what we can be and do or have around money and retirement, they have to evolve as well.
Yeah, well, and one thing I'm thinking of is in the US, the Social Security system, when it was implemented, people didn't live very long after retirement.
No,
It
right.
was maximum five, the average was under 5 years, I think, that people had Social Security. But as you point out, I don't know anybody who retired 100% on their 65th birthday, unless their company had a mandatory retirement age at 65. It doesn't happen. As you point out, some people are working past it. Some people are, semi-retiring before. I talk about it as finding your financial independence number,
Sure.
because that's really what, to me, it's about is where you can have control of money. Before we jump into the get ready questions, I want to ask you one other thing, just, because this comes up for people, is what is a money coach and how is a money coach different than a financial planner?
Sure. Great question, and I'm glad you raised it. So in simplest terms, we don't sell any products, we're not registered, we don't have to pass any exams. So we're never going to tell you what to do with your money. We're never going to talk about this fund or this strategy. Maybe strategy isn't the right word. We're never going to point you in the direction of any financial product or financial service. So fundamentally, if I think about money coaching, what it really does is money coaching is a framework for understanding your patterns and behaviors and emotions around money. So the way we look at it is you can't understand and manage the money in your life till you understand and manage yourself, or understand and manage your behavior around money, because it's your beliefs that drive your behaviors. It's not, as you have alluded to earlier, it's not all numbers. It's not all numbers based. So when I have worked with clients and they want to have financial advice, or in the UK we call it regulated financial advice, I send them to a financial advisor or a financial planner. So even within the financial coaching, money coaching space, there is a continuum, which is money coaching, in my view, and the money coaching that I do is very fundamentally around understanding patterns, behaviors, emotions, and it's kind of emotionally based. We do practical stuff, but we have to sort out where you are and why you are where you are first. Only then can you really start to make progress. I think if I illustrated with someone who called me up and said, look, I've tried 14 budgeting apps and none of them work for me. Can you give me another recommendation? You can begin to see that it's not a practical solution. It's not a budgeting app that this person requires. We've got to look at why they're blocked around engaging with budgeting apps and the budgeting process first before we go into the actual practical side of money. So money coaching in some senses is about why do I do this and why don't I do that? And how can I learn to do this? Then you can move along the continuum a little bit to how do I do this? Just kind of, I think of it more as financial coaching. How do I do the practical aspects of it? And then if we're looking into in terms of cash flow planning, in terms of investments, in terms of actually kind of making your money work in some senses, then you're into the regulated sector, which is a financial advisor or a financial planner, I think, in your country. So that's how I see it spread out. And the interesting thing with this is that actually most people want financial guidance. So I'm throwing in another
Hmm.
term here, but financial guidance is not regulated in the sense that it's like, well, how do I do this? How does this make sense? Should I be saving for this? How do I build a retirement fund, but also an emergency fund to this? So it's very much more generic advice in that, like, how do I negotiate the financial system? How do I avoid getting ripped off by credit card companies? How do I make sure I don't, do this or do that? So that to me, and that's the bit that is missing because there's a heavily regulated sector over one side. There's a few money coaches and financial coaches on one side, but everybody in the middle wants to know some of the basics of navigating the financial system and navigating their financial lives. And you can call it financial literacy if you want, but everybody has to learn from someone somewhere, and where do you go to and who do you go to in this space? So that tease it out a little bit for you.
Yeah, I think that's an awesome answer. And I think what that illustrates is that financial planners should not fear money coaches. Instead, establishing a partnership and relationship with money coaches could be a great addition to your financial planning practice, or vice versa to a money coaching
Sure.
practice. And then integrating, as you talked about it, perhaps financial literacy advocates, financial literacy tools, which is what I'm doing on this show, is, showcasing different types of people and resources and things
Right.
like that. Because for each of us, what we need is going to be different. And each of us have our unique journeys. And so the answer isn't particularly to say, okay, well, go read, Benjamin Graham's book, or a random walk down Wall Street, is those
Right.
are not going to necessarily be for most people. But for some people, they're going to say, I need that because that's what I want to learn about. And I think that's the thing is we have to recognize each of us has our own unique money journey and what
Right.
we want to accomplish.
Well, absolutely. And if I look at my personal story, I know, and I still do know a huge amount about the financial system. I know exactly how it works. I know how money moves around. I know all the different types of funds there are. But I didn't know anything about money in myself. So how that manifested itself, for example, is like I'm a really bad investor. I spent all my time looking for safe funds. I missed out on 30, 40 years of stock market growth because I was just too scared to invest. It just struck me as a really scary place. So yeah, we even with the best technical knowledge in the world around the different types of investments and everything, we sold investments for 30 years to various people. My own relationship with money blocked me from investing. So I needed to know who I, what I had to work on my relationship with money before I could actually get comfortable around engaging with the financial system in its fullest sense in terms of what it can do for you, and how you can benefit from it. And I
Yeah,
think a
I
lot of
think
people
that's just
suffer.
it. Oh, sorry.
Yeah, and I think a lot of people, I had all that technical knowledge around the market and I was still too scared to invest in it. So I'm not now. I just want,
Well, I
want
think
to.
a lot of people who have deep knowledge of the markets are more cautious than the average investor.
So
Um,
I tell you what one of the inflection point for me was I was thinking about what should I do for my kids? How should I invest for my kids and start them off? I thought, well, they've got 40 years, um, to invest, so they're long-term investors. So I put them into a global growth ETF fund, and because that's what you would do in terms of the long term, you'd put them into something that tracked global growth. Wherever global growth went, we know that it's broadly always going to outperform anything else. And when I did it for them, I went, well, you know what? I've still got 20 years investment or 15 years investment. Why don't I do that for myself? And so that's this actually when the technique there is psychological distancing, because when I thought about it for myself, I was too trapped in fear. When I thought about it for them, I wasn't so scared. And having realizing that actually it was easy to make a decision for them and hard for myself, I realized what was blocking me and what the fear was blocking me and what my fear was blocking me. And as I worked on my fear, I went, no, you know what, if it makes sense for them, why would I not do that for myself as well?
Yeah, definitely. Before we get into the get ready money questions, just a quick observation on that is a new strategy that's emerging as a bucket approach in retirement, because if you're retiring at the age of 60 or 65, your life expectancy may be, as you point out, 20 years, 30 years, so that latter part of your retirement is you're going to be living hopefully a long time. And so that's something to consider is that, you shouldn't move into just 1 year treasuries when you turn 65 because you're probably going to live longer than a year. So it's like
Right.
planning doesn't stop when you're 65, it just changes.
Yeah, it changes not suddenly. I think it needs to blend. I think this whole sudden change thing, again, is just a story that was created of like, probably about 100 years ago. Like, then you stop working. And I get that because 100 years ago, most work was manual labor and you wanted to stop. When the Germans introduced retirement, or at least state retirement, age 65, the average life expectancy wasn't 65. It was significantly less than that. So, yeah, people worked till they died and they didn't last till 65. So we do need to adjust this. And so in some senses, retirement is can I create enough cash flow to pay for my day-to-day expenses in retirement? Out of work, and then I've got so many more options. So we're talking about creating options for you around how much work you do or don't want to do, and what work you do or don't, what need to do, I should say, and then what you can choose you wanted to do. So the earlier you start that process, the the better, obviously, but it's also about creating positive stories about what you can do and who you can be in the later years of your life? How do you use, there's this concept of fluid intelligence is what people have in their 20s, and crystalline intelligence, which is what they have, what you and I have, right? We've got 30, 40 years of crystalline or crystallized intelligence. And that's valuable. That's really, really useful. That's a lot more than 10,000 hours.
Yeah, 100%, 100%. So, Dennis, let's jump into what I call the get ready money questions. These are the questions that I ask all of my guests. These are definitely more rapid fire questions. The first one is, what basic money concept do you wish people knew?
Ooh, well, we're not going to, I don't think, well, there's obviously, there's the obvious one is probably compounding. Make sure it works for you, not against you. But what I like is that the financial system is this amazing time machine. You can put money into it now, it will earn, and then in 30, 40, 50 years time, or even 10 years time, it will spit out, it will work for you, and it will generate with compounding something that maybe even doubles every 10 years. That's fantastic. So you can put it away now and put it, draw down on it in your future and later on. You can also do this the other way around. You can take money out of the future and use it now. You use it now to buy a house. That's what a mortgage is. I'm taking money out of my future earnings and I'm crystallizing it today. I'm going to buy myself a house. Don't use it to buy yourself a pair of shoes. That's not a good use of future cash flows, but something that will hold its value and possibly appreciate over time. So in that sense, it is pretty amazing. The thing with the financial system is when you learn how to use it, it's great. If it's using you, then it's really bad. So I would say, the basic money concept is learn how the system works and make sure it works for you.
Yeah, I love that. Learn how the system works and make sure it works for you. Because I think that's something that people miss. And, overall is that it's like anything. If you learn something, it's much easier to have it work for you. So the next question, Dennis, is what's one simple thing people can do each year to set themselves up for financial success?
Yeah. I would say, do you have a concept of an MOT, which is what you have to put your car through every year? Do you have like a car test or something? We have something when a car is more than 3 years old, you have an MOT. They go and check the exhaust and a whole
Oh
bunch of.
yeah, we have it's called a smog test.
Okay, so we have so I call it a money MOT. And once a year, you sit down and you check all your subscriptions and all your direct debits and all the stuff that goes out under the radar and cancel anything you haven't used for at least 6 months. Check the utility prices, switch if possible, and change banks. Find a bank that works for you. If you think about it, some banks try to be all things to all people, but our needs evolve over time. Most people haven't changed their banks for a very long period of time. And that's not because they like their banks. It's just a whole inertia thing. So once a year, check what's going out. And you should do it monthly, really, but check your subscriptions, direct debits, cancel anything you haven't used for 6 months. The other thing I
Fantastic.
would say is really important around this is like if you've tried to change a behavior, and some people pick January or a birthday, or I have a client that's working with me because he approached 50 and went, I need to sort this stuff out. And I don't mind. Um, if you've tried to change a behavior before and it's failed, then you need to be looking at it from the perspective of what unconscious blocks or patterns are holding you back. Because if you don't know why it didn't work last time, back to my prospect with the 14 apps, then it's still not going to work for you the next time. Willpower is not enough. You've got subconscious patterns from childhood probably undermining you. And those have been going on a long time.
Yeah, no, I love that answer. And in terms of the annual money audit, for people who are familiar, I have the Get Ready Movement Money Club where you can sign up for my newsletter where you get a weekly action item that over the course of a year helps you review all areas of your financial life. And that's for free. You can sign up on my website.
Right. And that's
Um,
brilliant because it's about agency and it's about taking back control. If you go back to if you go back to the millionaire next door and the four positive financial behaviors that he calls them wealth building factors, confidence, um, confidence, which is learning about the financial system. But the second one is like the third one is agency, take control, you know,
mhm, I love that.
and believe that you can take control. Then that starts a very positive cycle. So you just need to start a small part of it. And then your confidence will build both your confidence in your knowledge around the system, but also your confidence in your ability to engage with the financial system. Yes, I can do this. So many people get trapped around money. They're like, I was no good with it, or I can't deal with it, or it makes me feel bad or ashamed, and they get trapped in this shame cycle, and that's fundamentally disempowering. So it's a kind of learned helplessness in some cases, or just confused by the confusion of it. And we don't make it easy, or the industry doesn't make it easy. They're, oh no, no, no. Sometimes we tell them it's easy to do this, but then we try and go, oh no, but you need a professional. So nobody necessarily needs a professional to understand their finances. Maybe they need a coach, but we can all do it once we learn the tools and once we believe we can start doing it.
Definitely. Yeah, belief is a big part of it. And just understanding it. It's like anything, you have to understand the rules of the game and how it's structured. If you don't take the time to learn the basics, it is going to be a struggle. So, Dennis, what money myth are you trying to break?
So the biggest money myth, what do you say is the biggest money myth, Tony?
The one I always go back to is that whole life insurance is the answer to all of your financial issues. It is not. It's
So
an
what I
insurance
was
policy, not an
thinking.
investment.
Okay. No, that's not where my mind went. All right. I think the biggest money myth is it's not okay to talk about money. And maybe that's not the biggest money myth, but in a sense, it is okay to talk about money. The first question I ask every single client is, did anyone show you how to understand or manage money? Right? And I've done this not just in clients. I do talks on financial well-being. I did a talk at a school recently, and I always ask everybody, anyone show you how to understand or manage money? And the answer is almost always no. Right? Now, there are several clients I've had where whose parents, usually the dads, decided they did want to teach financial literacy questions, financial literacy. And guess what? That was so painful, they scarred the children for life. So it's always extremes that we kind of end up dealing with. But the fundamental point here is that if no one ever showed you how to understand or manage money, and most people don't, have that experience, or at least not a positive experience, and you can't manage it very well, it's not your fault, right? It's not your fault. We all need coaching. I needed coaching because my behavior, although it was frugal and, I built up capital and I had good savings, was unhealthy. The unhealthy bits are in the extreme saving or the extreme spending. The healthy bits in the middle. We don't really have a word for that now. So you need to talk about it. And don't beat yourself up because you can't do something that no one ever showed you how to do. And the other part of this, Tony, is of course like we have a subconscious inheritance from our childhood that is driving what we're doing. So it's not like we start adulthood with a blank slate. We have these inherited patterns, behaviors, and emotions that drive what's going on. And that's the bit that keeps people trapped in shame. Because like I've tried this. We go through this cycle as like, how do I do this? Why is this so hard? And then we end up at what's wrong with me? Because that's what the messaging we got in childhood. Why did you do that? What's wrong with you? Why did you hit your sister? What's wrong with you? Why don't you understand that? What's wrong with you? And so in adults, as a lot of adults, we go, well, I'm an adult. It's only numbers. I can't seem to manage it. What's wrong with me? Then we get trapped in shame. And then we're not going to talk about it. If I'm trapped in shame because I can't manage my money, or when I was trapped in, not even trapped in shame around being kind of mean with money, but I knew I wasn't going to talk to anyone about it. So it's okay to talk about money. Most behaviors are not your fault. No one chooses to be ashamed. No one chooses to be anxious. No one chooses to be jealous. No one chooses any of these emotions, and no one chooses them around money. So it's not your fault. You have to live with the consequences, but it's not your fault. So find a coach who will support you with no judgment and create a safe space for you to talk about things that you've probably struggled with for a long period of time. And that is the start of the healing process.
Yeah, well, I think that's so important is find somebody to work with who is judgment free because, like you point out, is like, where would you have had the opportunity to learn about some of these things? And then, if you grew up, like with your parents arguing about money, you're going to carry that and think about, well, I don't want to talk to my spouse about money. It's going to lead to
Right.
an argument.
Money is conflict. I just want to spend a minute on that because I think what is really underappreciated around how do we learn about money is actually how do we learn about money. We tend to think about money, learning as this kind of conscious cognitive process that we go through at school. And wherever we learn, right? I give you information, you learn it, regurgitate it, and I test you on it. But that's not how we learn about money. We learn about money because in childhood and infancy, we are learning machines. We have no core survival skills. So learning becomes a core survival skill. So infants just absorb everything that's going on around them, including money behaviors. Are they in charge of that process? No, they're not in charge of that process. They don't choose what to learn, and then they don't choose their environment, and they don't choose the behaviors. So what they're really doing is sucking in everything that's going on around them. And when it comes to money, most of that is suboptimal. And that's how we end up with our patterns, behaviors, and emotions around money. So none of it's in our control. And because it sits at the subconscious level, we're like, I don't know. Why do I do this? Why can't I spend money? Why can't I stop spending money? Because in childhood, this process of wiring you around money means that it's deeply rooted, it's subconscious, and you don't know what's going on. And that's why it's so important to have somebody help you explain what's going on, and then you can change it. It's very, very hard to change something if you don't know why you do it.
Exactly. Yeah, you have to understand something before you can do anything about it. So, Dennis, what is your personal favorite money resource, whether it's a podcast, book, newsletter, app, or website? What's the thing that number one thing you turn to?
Well, I'm going to give you three because I think it's important. So I think Morgan Housel has written some really great stuff and he has a great podcast. He's not for everybody, but he does help people to think about money, the psychology of money. He's got a couple of books out and he's got a podcast that's quite short, 10 or 15 minutes, and his thoughts on money and life and people. Um, from a psychology, so that's kind of what money from a practical perspective. From a psychology perspective, the best resource I've come across is called Being Well podcast with Rick Hanson and his dad. And then there's a guy called Rick Kaler. He has a podcast called Financial Therapy, which kind of pulls in the practical with the psychological, emotional sides of it. I think what's really important, because finances are complex, is to have some kind of consolidation tool. In the UK, I use something called Money Hub. One of my US clients uses something called Pocketsmith, and that pulls in all the stuff from all the different accounts and cards and stuff you have and gives you a consolidated view of your finances. You can go through every transaction and go, aha, now I know what's going out, now I know what's going in. And it enables you to do that kind of annual or even monthly check on what's going on. So so much stuff goes unnoticed in terms of money out. We know when money comes in because we get that once a month or every 2 weeks, but the money going out stuff is like a death by a thousand cuts. So it's important because we don't write checks, or not so much. It's important to keep track of all of this, all of those little debits that are going out on a monthly basis.
Yeah, well, I love that. Death by a thousand cuts. So, Dennis, to wrap up, what is your number one tip on changing the way we think about money?
So the best thing you can do for yourself and everybody else is to treat them with compassionate curiosity. Every financial behavior makes perfect sense when you understand the underlying beliefs and feelings and thoughts that are going on. It makes sense, even if it's bad for you financially, and even if it's looks really, really strange. So if someone behaves in a way that makes no sense to you, it really means you don't know enough about them. So get curious. Don't judge the behavior. Ask what's the pain? What purpose does it serve? What is the underlying fear? Most behaviors are fear-based. And behaviors are learned. They all have a purpose. And that's usually to keep you alive or to avoid pain. So treat yourself with compassion and treat other people with compassion and go, I wonder why they do that.
Yeah, well, I love it. And I love what you said about curiosity. Curiosity is so important. And as an advisor, be curious about your clients, whether you're a money coach, financial planner, insurance agent, whatever hat you're wearing, is ask questions, learn about your clients. Don't just talk to them. So, Dennis, oh, sorry.
Well, absolutely. And just to add a fraction more to that, a client's money beliefs will drive how they spend, how they save, and how they invest. And if you're a financial planner, that's what you do with them. So understanding a little bit about what they believe, what's their origin story, what did they learn about money growing up, what do they think is really important, what are some of the lessons they hold dear, that is not only does that bond you to the client and build trust and connection, it also gives you amazing insights into how you're going to work with them.
Fantastic. That's great advice. So, Dennis, where can people learn more about you and connect with you and what you're up to?
Thank you, Tony. So you can find me at cambridgemoneycoaching.uk. That's Cambridge Money Coaching is all one word, .uk. You can find me on LinkedIn. I'm Dennis Harhalakis. You can also find Cambridge Money Coaching on LinkedIn. I'm over here in Cambridge in the UK, but obviously we can connect however and you want. And yeah, I train a lot of coaches in the US as well. I work for the Money Coaching Institute of California. So if you're interested in money coaching and understanding your own patterns and behaviors, then look us up, Money Coaching Institute or Cambridge Money Coaching.
Fantastic. And for everybody watching and listening, there'll be links to Dennis's website and LinkedIn profile so you can easily connect with him. So, Dennis, thank you very much for joining us today on the Get Ready Money podcast.
It's been a pleasure, Tony. Thank you so much for your time.
Yeah, appreciate your time and insights. And thank you, everyone, as always, for tuning into this episode of the Get Ready Money podcast. If you learned something today to change the way you think about money, please be sure to subscribe and to tell a friend. Until next time, let's change the way we think about money.